But I do think that Bitcoin could run into some serious issues before year end. If we can't, then to me, there's still an opening for Bitcoin to go down to 12 to 13,000 level and maybe even below that. And I think that's the play right now, is to be safer and be kind of in the sure bet versus going for the kind of the home run, which could be Bitcoin maybe continuing up, but Bitcoin could also drop 20, 30, 40%. So we saw the CPI and PPI numbers declining just a little bit, which is what the market wanted to see. I think the one thing that stood out to me is that if you stripped out the core from the CPI, the number didn't really fall much. In fact, it upticked very, very slightly. So again, the PPI number was a very good number. It told us that on the producer side, inflation is dropping. The CPI number, if you took out food and energy, it was not dropping quite as much. So right now, the market's liking this. We're seeing a good risk-on environment. But I want to see what happens as we get into earnings season and what happens if we look at a recession like the Fed has now said we will get in the second half of the year. I think the key is, when you're getting inflation to come down from 9% or so, the initial move down will be very quick because, again, that was really inflated due to supply chain issues and other things like that. The trouble is always the last little bit. And I always liken this to, people can get in shape or I can get in shape, but how much more do I have to do to just get that six-pack, right? Inflation should come back to 3%, give or take, but can the Fed get it to 2%? Can they get it to below 2%? And I'm skeptical on that. I think it could take years for us to get below 2% again, and that's going to put handcuffs on the Fed in terms of if we do hit this light recession they're predicting now, how do they get us out of that, or does it turn in? And this is my fear, is that it turns into a recession that lasts a long time. We find ourselves in this light recession, but one that lasts for potentially a year or two. The market, again, is in this groove of ignoring a lot of these things. They ignored the Fed saying we were going to have a slight recession. They're ignoring Jamie Dimon saying this. Warren Buffett was on CNBC recently, and he said that one of his retail companies, their sales year over year were down 22%. Market ignored it. Wasn't even a headline. So there are these things that are going on right now that, to me, have me becoming more and more conservative and more bearish, while the overall market seems to be ignoring this, and it's risk on. Investors now have to be very careful. Historically, when the Fed actually even cuts rates, that's been a period where the stock market actually declines, even though right now it seems like investors would be thrilled if the Fed started to make money cheaper. The reason why historically the markets have declined is because if the Fed's cutting, something in the economy is really broken and they're feeling forced to cut. And that, again, would be a situation where I would be very nervous if we get to that point. That's the beautiful thing about it, is I'm a more short-term trader, meaning I day trade, I swing trade. Swing trading is holding for days or weeks or even a couple months. And so when you get added volatility like this in the stock market, in asset prices, there usually is fear-driven selling, which is an overreaction, and then fear or greed-driven buying, which is an overreaction. And so there's counter-trend plays to that. So it actually has been an amazing trading environment in the stock market, even in crypto. But again, it's not for the faint of heart. You have to kind of be willing to step up when everyone else is panicking. So we are at an epic level on Bitcoin, all right? And what I mean by that is that in terms of psychology of the market, this level is the top level to watch, meaning that if we can break it, that's very bullish that the lows are officially in on Bitcoin at 15,700. If we can't, then to me, there's still an opening for Bitcoin to go down to 12 to 13,000 level and maybe even below that. And the reason I bring up this level at 30,500 specifically is if we take a trend line and we go back to the lows starting in 2021 before the big pop, then the retrace came right back in there where we hammered on it for a long period of time. We then had the run to 69,000 and we came back in and consolidated right along that line. So psychologically, when we broke this, that was very bearish for crypto. If we could get above it and stay above it, then that's very bullish for crypto. We're still hammering on that level. And again, the level's approximately 30,500. So for me, this is an epic level to watch. I want to see, can it get above? Can it stay above if it gets above? If it does, I think that bodes very well that the crypto markets have bottomed out for this bear market cycle. So it's so interesting on the Bitcoin price because, number one, when it was at 15,700, 20,000 even, we were oversold. There's no doubt about it. We were just coming off of FTX's collapse, lots of fear, all of that stuff. Anytime you get a maximum fear you're going to get a reflex buy and kind of pop it. And then the banking crisis happened, and I think there was a lot of money that went right in from the regionals into Bitcoin, right? I mean, and again, I've said this before, but if there's one reason for Bitcoin to be Bitcoin and be what it is, that crisis in the banking markets showed it, right? I mean, that's exactly what Bitcoin is supposed to be. It's supposed to be an alternative to the fiat currency system and the banks and all that stuff. So that really propelled new money in. And then as of now, we've seen generally a risk-on environment in stocks, in cryptocurrencies, which has kept it kind of grinding higher. So I think that was kind of a little bit of a situation where it was very, very good for the crypto markets in Bitcoin. Now, again, the big question is, can it get through here? If the stock market starts to decline precipitously, does that pull it back down? I do think it's still a risk asset, even though it's still showing signs every once in a while of being a store of safety. So as of now, as long as we stay below this 30,500 level, I'm going to remain slightly bearish, thinking we still are not through the bear market. But again, if we get above there, then it could be a game changer. Again, the bigger question is on the levels. When do we break, right? So the way as a trader I work is that each level is a level until it's broken. So let's just say we pull back here. We could very clearly see that there was a lot of support here where it kind of consolidated, and that level's around 26,700. We then have a level at 25, and then this beautiful upsloping trend line around 22. As we break those levels, like if we break 22 here, you then have this pivot low at around 19 and change, essentially 20, and then the double bottom at 15.7. So for me, it's going to be more of a stage. I still think that's possible. I find it very hard to believe that somehow the crypto market has bottomed with so much bullishness in it. You never really got the panic and fear, even with FTX. You didn't get people saying, I'm throwing out crypto, it's done. You know, for the most part, it was buy the dip. And that's a very concerning mentality if you look at all the bottoms in markets in history. That doesn't happen. Also, you have so many cryptos that are still out there that have very minimal use case, if any, and they're still alive and well, versus in the dot-com era, you basically saw a washout of those dot-coms that had no use case. So there's a lot of signals to me that are very concerning. And so I want to be very careful about, you know, whether or not we can get down to 12 or 13. I think we still can. 9, if we break 12 to 13, then we're headed right for 9. Yeah, so for me, the most success has come from short-term trading, right? Where when we get this volatility in the markets, I'm jumping in and then I'm jumping out, and then I'm usually getting back in at around the same level. So it's been a trader's market. I think that when you had the Fed intervention with all the money printing, it basically made the markets just go sideways to up for long periods of time. The market was kept neutralized, almost like being a drugged patient, where the Fed was injecting this money, and it was just keeping the markets kind of in zombie mode, grinding higher. You now have a patient that's getting off the drugs, right? The Fed stopped printing the money, and now it becomes a much more real-life situation where there's volatility, there's craziness. And as long as the Fed isn't coming back and printing money, you're going to get this more volatile market, which means traders and investors need to be more nimble. You can't just be an investor that, to me, goes to sleep and says, hey, I'll check back in 3 years, and I hope I did well. Now, again, I don't think that we'll do a 9x here on gold at these levels, but at the same time, to me, this is the replication of human sentiment and what's going to come forward. So I do think that per the charts, and I've been bullish on gold for the last couple years, is that we should break the all-time highs at around 2075. And I think by year end, you're looking at 2,300 at minimum. And I think really 5,000 within a year or two is very, very possible. This should be the new bull market here in asset prices, if you will. And I think it's long overdue, and we should see. Yeah, I mean, I continue to be very, very bullish on gold. The question is, where do you buy? And basically for that, what we can see is if you take the high from 2022 to this high, there's this down-sloping trend line, and then you have this up-sloping trend line as well. And what we're seeing is that those two are getting closer and closer to the same level. So for me, that creates a confluence of two major support lines. And if we were to get a pullback on gold here to basically 1925 to 1900, that would be a really good technical support to buy for that next leg up that possibly could see a breakout through the 2075 level. Gold's performed amazingly well. I think it's beating the S&P right now, not obviously Bitcoin this year, but I do think that Bitcoin could run into some serious issues before year end. So I'm going to stick with the safe steady gold trade here. And I think that's the play right now, is to be safer and be kind of in the sure bet versus going for the kind of the home run, which could be Bitcoin maybe continuing up, but Bitcoin could also drop 20, 30, 40% in a very short amount of time. Bear markets notoriously show you who basically can trade and who can't. In a bull market, everyone looks like a genius.